Hello.
Hey, Andy. Great to see you.
All right. Yeah, good to see you, Brian. All right, so it is Friday, the 19th of April over here, and Thursday evening on your end. And very good morning, good afternoon, and good evening to the audience. A very warm welcome. Let's just jump straight into it. We're going to talk about the Bitcoin halving, which is happening in less than 24 hours.
Yeah, absolutely. It's been a crazy ride. We went to as high as 73.6K on most exchanges back on March 14th, but we've seen kind of a 5 week retrace, attempts to climb back up above 70K and even combat that new all time high before failing and kind of crashing back down. Now, it hasn't been a massive crash, but it's been enough to cause quite a bit of FUD and change the context of how this halving is being perceived. It was euphoric throughout most of the year, and then all of a sudden, people are now kind of diminishing the importance of it because prices have retraced.
Yeah, absolutely. And it's interesting because I think we are where we were maybe a couple of weeks ago, price wise.
Yeah, we are. I just started sharing my screen here, and you can see the weekly returns have been pretty abysmal. In fact, at the time of this recording, which is around 6:40 p.m. PST, where I am in on the west coast of the US, Bitcoin's dropped down to 61.5K. Ethereum is back below 3K. Just a sea of red all over the place, with a few exceptions. And if we go to the 30-day, suddenly we are not seeing such a bad picture. Bitcoin is actually right back at about the exact same point in which it was back on March 17th or 18th or so. 61.5K, just below 62K was where we were then. And after all of the crazy volatility and attempts to get back to that all-time high, we're right back at kind of square one from 1 month ago. So it's funny because at that point, everyone was very euphoric at 61.5K because we hadn't seen those prices since 2021. And now, as we've retraced back to 61.5K, suddenly people are disappointed at this price level. So it's funny what a month of time can change.
Yeah, absolutely. It's yeah. I think if that I feel the longer in this space you've been in, the kind of less you will feel with the volatility. When you first get into the space, yeah, I mean, your heart goes up and your heart goes down and it goes up along with the Bitcoin price. But after being in this long enough, it's like meh, it's just another day in Bitcoin, right? Another day in crypto.
Totally. Yeah, it's funny how you describe that. I've often equated time spent in investing the same way it's as time spent on the planet, because as you age and you're an adult, you have those same small things that are happening to you and as an adult that may have happened to you as a kid, but you're more immune to it because you've experienced the ebbs and flows of life. And I think that's kind of what investing is you go through enough time where these big fluctuations do not impact you the way they used to. So there's a psychology and philosophy to investing that a lot of experienced traders preach, but until you actually experience it, you're always going to have a bit of fear when you see these types of big dips occur. And that's what we're seeing a lot in terms of the social commentary on markets right now, heading into these final few hours before the halving.
Yeah, that's interesting. Which I guess that there's probably a lot of new people coming into the asset class. A lot of people who may have not dabbled in it, and it's their first time, and they're new.
Yeah, undoubtedly that's true, but surprisingly, it's not as much as you would think. Uh, Most of the people flooding into crypto we're coming in around the beginning of the month, or month of March, I should say. You can see the amount of buy calls and sell calls that were especially erupting about a week before the all-time high hit, March 4th, 5th, and 6th or so. In fact, there was a lot of sell calls in particular, and we've talked about it before, Andy. When you see people being more negative toward crypto, that increases the probability of prices climbing, and that's what happened. And suddenly you weren't seeing a lot of red bars indicating these sell calls here as the all-time high occurred, and that increased the probability of us correcting. And we've seen a few different, polarized moments here around the turn of the month to April, some big buy and sell calls forming right here by the dip call that didn't really work out, as it usually doesn't for the crowd.
Yeah.
And now we're here at kind of the low end of this range we've been on, threatening to go below 60K again.
Yeah. Yeah. And so what is the sentiment at this time? Like what are we seeing currently?
Yeah, so we've got a few things we can look at. One thing that's been catching my eye is the amount of mentions of bull market, right? Which is obviously going to be an optimistic or bullish type of term. And you can see that ever since around the end of April, the mentions of us being in a bull market have fallen off a cliff. Even before the all-time high hit, there was less and less discussion of it. Meanwhile, the mentions of bear market were kind of dropping also, but right about a week and a half ago, 12 days ago, we started seeing a tremendous amount of bear market calls indicating that the crowd is becoming quite bearish. So bear market here, bull market here, pretty big difference in the amount of people perceiving the markets in a bullish context versus a bearish context.
That is interesting. That is
Yeah.
cool.
And we can also, of course, look at our very popular weighted sentiment indicator. We go down here to that metric, and you can see, I would ignore this less than 1 day sample size of the current week, but if you look at the past 1, 2, 3, 4, 5 weeks here, you can clearly see that people were showing a bearish bias for quite a while now, right after Bitcoin started to correct and take down the rest of the markets with it. So yeah, we're seeing a bit of optimism now. I presume it's just from the last almost 24 hours or so of people mentioning the fact that the halving is about to arrive. But I still would call this kind of a bearish sign, considering we had 5 straight weeks of less discussion about Bitcoin, and the discussion that has been going on has had a predominant negative bias to it compared to usual.
Okay. That's interesting. It's I was so we had an event last night talking about the Bitcoin halving as well. And so I had to I had to prepare my deck of slides. And what was interesting is from what we saw since the ETFs were went live, I think January 11th to now. I did a comparison between the number of Bitcoin purchased by the ETFs versus the amount of Bitcoins mined, and it was pretty interesting. So the number of Bitcoins purchased were over 200,000 Bitcoins, and the number of Bitcoins produced by the miners were 74,000.
Wow.
So there were there were a lot more Bitcoins purchased than they were produced. So it's interesting.
Yeah, that is a fascinating development. I try to keep a vague pulse on the miners and how those are impacting crypto, and obviously with the halving, it's in the forefront right now as to how interested the miners are going to continue being in mining Bitcoin now that the difficulty is going to double, and theoretically that's going to make the new existing Bitcoin entering circulation a little more scarce. So it's probably not something we're going to see the effects of until after the halving. If anything, miners might be, being more aggressive in mining as much as they can right before the halving, while it's half as difficult. But certainly, it hasn't really had a positive impact on prices yet. What I do think has had an impact on prices has been the funding rate, the amount of longs from margined and leveraged positions that were forming right up to the all-time high. They dropped off in mid-March, came back up high when we saw a rebound, and it was teasing a new all-time high at the end of March. And then all of those got liquidated, not all, but many got liquidated. Funding rate got flat again. We see this spike in longs one more time. They get liquidated. And now we're starting to see the most prevalent existence of shorts since early February, probably even beyond that. I'd say this is probably the biggest notable spike in them from a consistent standpoint since the very beginning of the year here, the opening week of 2024. And that's a good sign. We actually want to see more shorts and less longs. So this green here, it's not even staying at neutral anymore. It's starting to go below that as short perpetual contract rates are getting more and more visible. So I think this is a good thing. It obviously backs up the notion that the crowd is rather bearish. And I wouldn't be surprised if there is some relief bounce, perhaps right at or right after the time of the halving, that ends up liquidating these shorts and the funding rate gets neutral again, kind of like we saw at the beginning of April.
Yeah, that's interesting.
But funding rate is essentially like how people are putting their money where their mouth is, regardless of what they're saying on social media. This is an actual measurement of how they're placing their bets.
Yep. And that's just it's interesting how quickly or how fickle, I guess, the crowd is.
I know. Yeah, there's a major recency bias, like I mentioned. I mean, 61.5K was an amazing market price a month ago, according to the crowd, and now it's a disappointing one. So
yeah.
And you can see whales too. I'll transition over to them for a moment. You can see that there were just tons and tons of transactions, clearly profit taking going on here, right up to the all-time high, with these especially $100,000 or more bars. Same thing on the $1 million or more. Both were kind of peaking around this time, and then they've dropped off ever since, indicating there's a little more kind of shoulder shrugging going on from the whales as they're waiting for the next big move. I find that fascinating as well. And if we look at the amount of Bitcoin held by what we deem sharks and whales, addresses that are capable of making transactions that are valued at $100,000 or more. We look at the 10 to 10,000 BTC tier from a supply held standpoint, like percentage basis, and just like a total amount of Bitcoin basis. Because obviously miners, as new coins come in, they're going to make a slight difference. I actually like this line the most. The absolute amount seems to have the most correlation with where prices go next. You can definitely see the impact, from December through January, when we had kind of a temporary drop during the bull cycle that was happening since mid-October. And you can see that they actually dropped. If I drag my mouse here and hold down shift, they dropped about 102,000 BTC during this 6-week stretch or so. And then after that 6-week stretch, they've been on a massive accumulation pattern for the past 3 months, where they've accumulated about 210,000, adding about 1.62% to their existing supply that they had on January 21st. That's a really good sign to me, especially when you're seeing, prices doing this, right? These green bars are the price of Bitcoin. And then the amount held, if we just take this part right here, they're going up. That's a pretty classic bullish divergence to me. And this isn't just any metric. This is one of our primary metrics that we usually look to see where markets are likely to head next. And whales and sharks are always going to be in control of the markets. And if they continue to accumulate, don't be surprised if a lot of these bearish traders get left in the dust and regret their decisions.
Yeah, that's interesting, and that's usually the case, isn't it? It's the case in traditional markets. It's the case in crypto. It doesn't matter, what asset class you're looking at. The whales are usually accumulating when all the retailers or the whole market sentiment is bearish, and
Yeah.
then and they will sell to you when the market sentiment is bullish.
Yeah, that's exactly right. That's exactly
Yeah.
right. So we're kind of just keeping an eye on whether they're going to continue their accumulation here or start to, at least show a little bit of profit taking. But up until the halving, it doesn't look like they've shown any interest in dropping their coins.
Yeah, that's really interesting. In news, I've seen that there's been, someone that that social media is called Mr. 100. He's been accumulating Bitcoin in 100 Bitcoin tranches, and he's been doing that since I think November 2022.
Okay.
And apparently, he can do up to 5 tranches in a day of buying Bitcoin in 100 tranches. So that's interesting.
We can check out the mentions of him. I had this screen open that just shows the very predictable increase in commentary related to the halving. So no surprise that it's dominating conversations now. But let's see if there's any added mentions related to Mr. 100. We'll try a few different combos here. Mr. 100 or Mr. and 100 or Mr. with a period and 100. Let's try all those combined. It doesn't look like there's anything special, so the crowd isn't talking about it much. Maybe if we go back to November, not too much. It looks like most of the mentions were happening in the January dip all the way up until late February. So yeah, I think we could keep an eye on him for you and talk about what he's been doing going into our next show.
Yeah, that'll be interesting. Because I think some of the commentary is saying that it could be a nation state that is trying to keep a lid on it, but they're accumulating Bitcoin.
Is he anonymous or is he someone who identifies himself?
No, it's anonymous. Someone actually figured out, oh look, this address, it keeps adding Bitcoin in tranches of 100.
Yeah.
Yeah.
Yeah, that actually makes me curious what the top transactions are. I wonder if there's any. I don't think that the amount of 100 BTC would qualify as any of the top transactions over the past month, because there's way higher ones that are consistently happening. But we can actually look on Santiment. We haven't really done this too much on our shows, Andy, but we can see the largest values over time over the past 30 days in terms of BTC transactions. You can see March 22nd was a huge day. This was right about there. So this appeared to likely be some accumulation. I can actually just take the transaction volume of BTC in USD and just put it right above here. So this is the transaction volume related to these top transactions per day. I'll put it on it's on daily already. So the 22nd, nothing too special on this day. Most of the big spikes happened a little over a month ago at the beginning of March. A few on April 2nd. This one happened yesterday. So this is actually a marked address. It's on. So this was 19,249 BTC moving to Binance, which was likely a red flag that could have explained the upcoming drop that we're seeing today. I do think that this amount of BTC is enough, if it's sold off, to easily send markets spiraling downward, because that's tens of billions of dollars, if I'm doing the math correct.
Yeah.
So
Oh, that's
yeah, you can
interesting.
always check out. This is for any asset.
Yeah.
You can look into the top transactions on a network and see, exactly what the patterns of are, especially if there's coins moving to exchanges. That's very applicable.
Cool. Okay.
But
Nice.
overall, I mean, the supply in exchanges is staying very low. Very slight
Mm-hmm.
uptick here that happened yesterday. This could have been due to
Mm-hmm.
that 19K plus BTC transaction going to Binance, but it
Ah,
isn't
yes.
much. It is
Oh.
not much at all.
So is that in percentage or is that in number of Bitcoin?
So we actually recommend not paying too much attention to the number because we're still
Okay.
updating that
Yep.
number in the top left here that's showing 5.3
Mm-hmm.
percent of supply and exchanges.
Yes.
We acknowledge that that's probably not the true precise number, but based
Yep.
on the addresses we're following, when you
Mm-hmm.
see this number drop, that's based on the
Yep.
known exchange addresses
Yep.
that we're aware of, and anything that isn't a known exchange address, when it's moved off of there, we consider it a
Yep.
non-exchange address. So dropping is still a good sign. Rising is still a
Yeah.
scary sign.
Yes. Wow. That's a massive drop over.
Huge, yeah. All
Yeah, straight
very
down.
much related to March 5th, right before, like a week before the all-time high occurred.
Nice.
Trying to think if there's anything else, Andy. Is there anything you're focusing on, even going into equities? Because I know that crypto and equities have been quite correlated.
Yeah, no, I think no, I guess the really usually the halving whilst media kind of hypes it up to be quite a huge event, it's usually a non-event in the sense that the Bitcoin network's still going to be here, it's still going to be running, the miners are going to still be mining, but their rewards will go down. So really, after that happens, it's more of a, so what are the miners going to do, because their costs will still stay the same, but the amount of rewards will go down. So I guess the smaller ones or the less efficient ones will sometimes shut down, and then the more efficient ones will keep going on. So sometimes I think you see a dip in the hash rate in the uh, uh, past halvings, but other than that, I think this time round, where it's slightly, what's different from the other halvings is that you now have the ETFs. So every man and his dog with a stockbroking account can purchase Bitcoin, and that's massive liquidity because
Good
it's no
point.
longer just uh, limited to the crypto people, right? Who are technically comfortable and savvy to move coins around and all that. So I think this time around it's and things in TradFi world works a lot slower than it does in crypto. So I don't know, like it might even be a prolonged and a slower you know bull run.
Yeah, I think that's well said. I mean, I even saw a popular Reddit post that came out yesterday where someone was reminding the crypto community that the halving event is not just a magical date that is going to mark a significant all-time high. Like most of these events go, it's usually the weeks or months leading up to the event where the true, baking in, if you will, on the price
Yeah,
occurs. And
yeah,
we really, I think, in my opinion, this is only my opinion, but I think that baking in period was pretty much what the all-time high was all about 5 weeks ago. It was people getting ready for the known event that was going to happen on April 19th. It wasn't going to be canceled or changed. People knew about this, a year ago. So
yeah.
I think that the effect of the halving already kind of took place, and now it's just a foregone conclusion when it happens tomorrow. And then we might see a little bit of a reaction to it based on how miners uh, react.
Yep.
Maybe they'll stop mining so much. Who knows? But um,
Yeah.
at least up until tomorrow, I don't see much change occurring. unless a whale or a
Yeah.
shark decides they want it to change.
Yeah, yeah, I agree, and I think to add to the miners, the smaller or less efficient ones who decide to turn it off, they may turn off their mining rigs for a while and decide to come back on, or they may just decide to pack it up. That's it, this is a big money game, and I cannot afford to keep increasing hashing capacity, and they may end up selling their miners to the more efficient and larger miners who end up buying those mining rigs and putting the hash power back on. So you might see a dip in the hash rate, and then it may go back up to normal, and then some. Who knows?
Right. Yeah,
Yeah,
great point. Great point. I can't wait to see how the reaction uh, comes down from that group specifically. And I also
yeah,
brought up
yeah.
this ETF dashboard too, because you mentioned them. The volume's still been
Cool.
pretty consistent. It isn't quite what it was during the weeks right before the all-time high, which was right
Hmm.
about here, and
Hmm.
a few days after the all-time high, when everyone might have been expecting a rebound, and then it kind of dropped off a little bit, but it's still quite high at over $3 billion in volume, sometimes up to $5 billion in volume per day. And that's still much higher than what we were seeing, pre late February, when it was more like 1 to 2.5 billion. So the ETFs are very alive and well. Money continues to be moved out of GPTC, the old OG ETF that's been around since 2015, and it's going into, BlackRock a little bit. Fidelity is kind of flat, but there's still plenty of inflow days here, more than the outflows. We've got a lag on the Bitwise info and some of the others. But yeah, I still see that there's plenty of volume. Keep in mind, volume doesn't mean, people buying or people selling. This is just the total of all of the buys and sells. But it's at
Yeah.
least showing that there's a lot of activity still there. So people that want exposure to crypto without owning crypto are still very much using these exciting ETFs that have now been around a little over 3 months.
Yeah, and one thing about the ETFs is this. So in TradFi land, this decision making processes take a really long time. But think about it. There are so many asset and fund managers out there who may decide to allocate a 1 or 2% of Bitcoin into whatever funds that they're managing, which is what I think ARK is doing, and I think Franklin Templeton mentioned that as well, that they were going to do that. So when they start doing that, they're not going to buy spot Bitcoin; they're going to buy ETFs, and they're managing trillions. So when they decide that they're going to allocate, 1% of all their funds to have Bitcoin exposure, imagine that wall of money that will come in to buy the ETFs. So, but that decision making process on whether or not to allocate, or how what percentage to allocate to their funds, that takes a long time, because they'll have to go through the investment committees, they'll have to debate it out, they'll have to look at the risks and all that. And once that decision's made and they move to execution, that's when you'll see it happen. And so that's why I think it's it's pretty big, because now it's the floodgates have been opened, because like I said, every man and his dog with a stockbroking account can get access to Bitcoin.
Yeah, 100%.
Yeah,
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 can't wait to see how this next month goes, so we can touch on just what the impact was in mid-May. But yeah, I'm looking forward to the developments here. I'm checking the prices right now. Yeah, I mean, Bitcoin is now below 61K, and could be below 60K by the next hour or so after this show ends. But um, maybe there will be some opportunities to buy the dip coming up very soon, and we'll of course keep the EquitiesTracker community updated on that. You can follow us on Santiment feed on our Twitter/X, and several other platforms. But just want to remind everyone, if you would like to tap into our metrics, feel free to go to our pricing page which you'll always find at the top right of our Sandbase platform. Sign up for a free account, whatever you want. You get an automatic free trial when you sign up for any of these before any charges kick in, and you can cancel before they kick in. And use code EquitiesTracker where you'll get 25% off your first purchase. It's a pretty nice deal, and it supports both us as well as Andy and the rest of the EquitiesTracker team.
Yeah, no, definitely, and it's definitely a worthwhile for you to use the Santiment platform. It's been a very useful tool for myself as well to get the amount of transparency to see what's happening on the on the sentiment on the sentiment in the market and also on-chain data.
100%.
Okay, I think yeah, we've come to the end of it. And any final words for the audience, Brian?
I don't think so, Andy. I think we covered it all. As always, just be mindful of your risk and make sure you're not overextending right now while the crowd is extra emotional. It's something that, even though we don't give investment advice at Santiment, we're always comfortable giving that recommendation to be safe and cautious and understand your own risk tolerance and don't jump out of that based on emotion.
Yeah, absolutely. And I echo the same that Brian's just mentioned. Stay safe out there. Investing can be very emotional, and it is very emotional. We are only human. It makes us fear and greed is real. Just try to sort of be a little bit more introspective and to realize whether you're being driven by either one of those emotions when you make those decisions, and don't overstretch. Don't borrow money to invest. It's never manage your risks, because I saw a tweet the other day, or a post on X, and there was someone that had a long position on some meme coin, and about $1 million worth, and they were liquidated by the time they woke up, and he was feeling suicidal, and that's very sad. So don't know, like just know what your risks are, how much you are willing to lose. Then yeah, that's just don't go overboard. Just be mindful, as Brian mentioned. Yeah. Well, looking forward to the halving event and to seeing what happens next. And we will see you guys next month. Yeah.
Can't wait, my friend.
Yeah, looking forward to it. So thank you again, Brian, for coming on.
Thanks for having me as always, Andy.
All right. Have a great one.
You too. Take care, guys.
Take care. Bye-bye.